This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. Welcome back to Invest Like a Pro. And today I want to discuss why I use multiple time frames. And I think if you've watched enough of the channel, you realize almost every decision I make, I'm looking at one time frame and then I'm looking up. And then I'm also looking down. So I have my main trade time frame and looking for some setup, typically near trend support. And then I go to the lower time frame to identify the trigger. Now, I do like to look at the higher time frame too to make sure that I'm not doing anything really stupid. Like I don't want to fight the bigger trend. I also don't want to buy into an exhaustion move. And so these are all criteria that I think are pretty important. I want to give you an example today of a specific trade setup that can be used by itself, but I typically don't use it that way. And it's the pinch play, and what I talk about in my book, it's called a pinch play. And so it's not something that you have to use multiple time frames on, but when I typically use it and look for it, I do go down to the smaller time frame to confirm what I'm seeing. So let's go ahead and get into this example so I can show you what I'm talking about. So in the recent move in Newmont mining, we've had gold make a pretty good move here. I want to discuss this last run, this move here on the daily chart. Now, where that shows up on the weekly is actually up in this area here. This stock had already made a decent move. It was kind of working up into resistance. But there's a few things that I think are pretty important that would still allow me, I'd be willing to take this trade. And I'm going to outline those here. And so the first thing I would tell you is we have a very strong trend on the monthly based on the ADX. And then if we go to the weekly, look what the ADX was doing on the weekly chart. You see how we had a steadily rising ADX line crossing above 25 for the first time in a long, long time. And green is very strong and hitting new highs. So when I see momentum that is that strong, and I know I'm playing a pinch play, which is just a swing trade, right? I mean, if I do it off a daily chart, I'm really only talking about, somewhere in the area of the next 2 to 5 days in most cases is what I'm looking for this play. It's not necessarily something that I'm looking for a move for the next couple months. Now, you can use the pinch play as an entry point into a trade you want to get in for a bigger picture move. But I would suggest in that case, I'd be looking for it closer to the breakout area and, improve your risk reward, that type of thing. But if I'm going to do it isolated and I just want to put on this trade by itself, I don't want to buy into a climax pattern. And that would mean if this keeps going and gets really extended away, it's made, especially on the monthly chart, if you can see, it's gone way, way up. And then we get a little setup like that. I'm probably not as interested in that kind of a play. But because the momentum is just getting going on the weekly chart, and we have an ADX that just turned up again on the monthly, I'd be willing to take this trade coming out of this little base here. You get the breakout and you get your first pullback. So now let's go and take a hard look at the daily chart. So let me pull this up. So as I mentioned, you take out this and you break out this level, and then look at what happened on the earnings. So on the earnings day, you had a gap up and it kind of crapped out. You see that? How in most cases, I'm sort of saying to myself, okay, I'm going to pass on this. But look at what this looked like. If we take that bar out of the situation, you have a really nice breakout pattern. You have a perfect pinch here. You have beautiful green DI showing up, and look at what this ADX is doing. Okay, so I'm still interested in doing this trade. I got this red bar. It's making me a little leery, but I know that if I can take out the midpoint of this bar, which is somewhere right around in here, that I've kind of overcome that bad bar and I can play it to the upside. So I think you want to take that into account. Now, there's something else that I would tell you is that if this was really a bad bar, then we would have downside follow through. Even if, let's say this day it didn't, you'd have follow through at some point over the next couple days. If this was really bad for this stock, you should have follow through after a bar like that. But instead, if you notice, the low of that bar was the low of the move. We had no more follow through after that. We still have a nice look to the moving averages. We've come back to price or trend support. Right? We've got the breakout and we've pulled back to trend support. We're holding the pinch, which is very easy to see the pinch coming in. And then we have this two lower highs. Now, they're very minor. This was 68.41 was the high, and then the next one was 68.40. So it was only a penny lower. But in a way, that's actually kind of bullish because we don't have any downside follow through to that. So once we have those two lower highs in place with the pinch and this DI in place with the rising ADX, you could take the high of those two bars. Now, I don't usually do it that way. I look at this and I say, okay, let me go down to the smaller time frame. So let me just circle that level here. And then let's go and look at the hourly chart. So that's where we're starting to get this two lower highs to develop. Okay. Now look at what's taking place in this time frame. We had MACD that was overbought and worked its way back down to the zero line. We had really good ADX condition on the up move, and then during the decline phase, during the correction phase, not really very strong ADX at all, and green got right back above very, very quickly. So I think these are the types of conditions that I'm interested in. So it makes me less uncomfortable with this kind of reversal that took place that created that red bar on the daily chart. And you can see we kind of rallied up to the midpoint of that decline and then coming back up through. Now, here's where I probably wouldn't take the 2-bar high trigger. I think what I might do is let this go ahead and move up, and then taking this higher bottom like that with this green bar showing up in a test of the 18 here, I think makes it just a little bit more attractive. So if I'm being honest about this, I probably wouldn't take the 2-bar high on the daily chart. I think what I would do is look for a trigger on the hourly chart. And so that's kind of how I think I want you to start thinking about this. If you trade in a single time frame, I mean, you can do it as long as you have the right underlying trend strength in place. You can do it just based on those 2 bars, taking out the high of those 2 bars and having a good setup in place. But I think you're going to increase your odds by using the lower time frame. Now, I've gotten a question recently on whether I would wait for the close, taking out this pinch play. Do I wait for the close or I do it intraday? And I would do it intraday if I'm going to do it off of this, right? When volatility goes up, if I'm not going to use the lower time frame, then I probably would use the close. But if you use the lower time frame, then you don't have to wait for the close because you have a different signal taking place. This is the other thing that I really like about this is this big bar, this big reversal bar took place on the first bar of the day. So as this is working its way up from here and kind of taking out this little handle that formed, so you had a little cup and then the handle taking out the high of that, you're still pretty early in the day. So anyway, I mean, I think we want to use this lower time frame to fine tune, always use that to fine tune your entry. You don't have to use that for your stop point. You could still use the daily as your stop. And you might even want to use the 18-day in this situation to give it a little bit more room. But I'm just telling you that if I'm playing this and I know I have a pinch play in place, I want to go down to the smaller time frame and still use that as a trigger. So that would be my recommendation in all the setups that I use. If you can go down to a smaller time frame, go ahead and do that. If you don't like to use intraday time frames, the only thing you're using this for is to help with the timing And then from there, you go to the daily chart. Don't manage the trade off the hourly in this situation. The trade is off the daily. Manage it off the daily if you want, but what you can do is improve your timing and your trigger using the lower time frame, and then from there you can manage the trade off the daily chart. There's nothing wrong with doing it that way. You're going to increase your win percentage doing it that way, and I think you're going to increase your timing using the smaller time frame instead of just triggering off this signal. So anyway, post any questions or comments, and we'll see you next time.